Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarty, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate.
Hello, guys, everybody. My name is Mark Monroe. Today's this week's host on Real Estate Power Play. I'm excited this week about when it talks cost segregation. But anyways, before we start, wherever platform that you're listening to us on your favorite podcast, please like, share, follow us on YouTube. Follow us through any of the social media. And if there's anything that you want us to address, or if you want to be a guest on our show, reach out to us. But this week, I'm super excited. We have, actually, I'm going to let you introduce yourself because I can't even see you right now. I'm sorry, go ahead.
Hello, everybody. Mark, thank you so much for having me here. My name is Dagmara Gajewska, and I'm a cost segregation specialist. I have been working with the company that has been the pioneer on the market for over 22 years. We have done more than 15,000 studies, and it's fully engineered study, which is extremely important because there are different methodologies that apply to the cost segregation studies. And we were able to create millions and millions of dollars in tax savings for our clients over the period of time. So thank you so much for having me here. And thank you so much to all the participants that decided to join us and learn about this amazing strategy that can help them create a beautiful cash flow in the business, basically increase the portfolio because of the savings, and save from the federal taxes as well. So
we got that. We ran into each other, just so we kind of become friends over the past month. We just ran into each other. We're both in South Florida. We're at Boca Raton, this place called Meisner Park, and just like a great area. And I think you had a friend down, and
yes.
You were kind of being a nice you're being a guide. I guess you're trying to recruit some more friends to move to South Florida.
Well, my girlfriend came to visit for the long weekend, so obviously we went out, and she's looking for a place to move. So we decided to go out. And as everybody knows in business, networking is a crucial part. I have been doing that for over 13 years, and it has been an amazing journey that brought me in front of such great friends, business people, amazing connections, and power groups. It created a lot of amazing opportunities in my life.
I mean, we just sat down,
and that's how we met.
Yeah, we just sat
yes.
down next to each other, and we just started talking, networking, and then just before we came on, you were looking at one of our podcasts, and it was one of your clients. Why don't you tell us a little bit about that and how you got this client? It was through, I think that we said, the Commercial Academy. I don't know these guys. Gabe, that's the other co-host. He goes to the Commercial Academy. I've been to the one in Orlando. But tell me a little bit about your clients and how that just came about. That's a small world.
It is a very small world. So Andrew Salih is one of my clients, and we met at Tony Robbins events, since I have been a volunteer for Tony Robbins for more than 16 years right now. And we met with Andrew at one of the events, and that was 2 years ago. So we became very good friends. And then it turned out that Andrew is doing commercial real estate. So we started talking about that, and little by little, we figured out that cost segregation would be a perfect strategy for him and for his buildings. And we did all of his buildings, and here we are. And we became very, very good friends. So he's just one of my clients, but many clients from many different walks of life are people who truly benefited from the cost segregation.
It's awesome. Yeah, no, I know. I've actually done it in some of my properties.
Oh, you did?
Well worth it. Yeah. Oh, yeah, I have. I've done it before.
How did it work for you, Mark?
It was amazing. I mean, it was a tax savings. I had another one that I was going to be doing, but I'm going to be selling it pretty quickly. So I decided not to do it quite on that particular one yet. But yeah, I did it on my 13 unit up in New England, and yeah, it was just it was a little bit of a process, but it was definitely worth it, for the tax savings, 100%. So why don't you kind of give us an example for people that are new in real estate and they have rentals, they may not even be aware of this. So do you have like an example and kind of go through some numbers? And I know you have some bullet points that you definitely want to hit up, so I'm going to kind of let you talk here a little bit.
Sure. I would love to introduce your clients to this strategy so that they know a little bit more in depth how it works, how to start, how to qualify the building, and what to do next after this podcast to know if you really qualify and how you can use it for the year 2023 in taxes. So cost segregation has been on the market for more than 20 years. However, the biggest attribute to the cost segregation came in the year 2017, when there was a bonus depreciation that was introduced. So what it did, instead of having a straight line depreciation for the taxes, it provides the accelerated bonus, the front load bonus, in the first year, anyway between 20% to 60%, depending on the building. And that can be utilized in the first year. So for example, if there is a building, let's say $3.9 million, a CPA normally would take 39 years to depreciate $100,000 each year for 39 years. If a client would do a cost segregation with my company, they would be able to probably utilize around 25% of that whole amount in the first year, which makes it $1 million. So instead of waiting for that $1 million for, let's say, 10 years, we can have it in the first year, and you can use it as a tax write-off from the federal taxes. And if you don't use the whole amount in the first year, then it rolls over to the next year. And it rolls over indefinitely as long as you use the whole bonus depreciation, and you will still have the straight line depreciation left for a certain amount of years. So if someone is looking for a strategy to provide a cash flow and to basically have more money in their pocket, to buy more real estate, then this is a perfect strategy of doing the savings and providing it to yourself.
Nice. So as an owner, what would I look at to see if my property would be eligible? Like, give me an example of something like that.
So we can go back 10 years and we can see if your property qualifies. People absolutely need to have a certain, if they did the improvements, they obviously need to have all the proof and receipts, because we do not want to expose anybody for any audits. So we can go back 10 years and then we can see if the building qualifies, if as long as it's commercial building, or as long as if it is a building that brings the revenue like rentals, we can absolutely examine it and see the square footage of the building, when it was purchased, what is the address of the building, and we prepare complimentary evaluation. And basically, we guide the client through the numbers to show them the power of the cost segregation. So we would welcome anybody that would like to try and see if they qualify with the building. We would be more than happy to guide them through the qualifications and show them the numbers if they qualify and what it can do for them.
It. Yep. And what do you think is like the minimum doors that where it makes sense? Like, it probably doesn't make sense for a single family residence, and mainly more of the multifamily. Like, how many doors and above where it usually makes sense?
So if the building is $500,000 and up, this is the the point where we can start doing fully engineered studies, which is the most detailed studies on the market. So we have been the pioneer of a fully engineered study, and that's why our clients are able to have a peace of mind and sleep peacefully, because our methodology is very transparent. We do not group all the elements together, but we list every single element and every single component of the building, so that if there would be an audit, our clients don't need to worry about it, because every single component is listed there. So there's no question mark left. A lot of our competitors, they are great people, but they use the software, and they often group the components together. So the study is not as detailed as the fully engineered studies. And what it means with the numbers, when you compare it with the numbers, we usually find between 5 to 10% more with our methodology for our client in savings than just doing the regular cost segregation study that is using just a software. So it's a huge amount of money, because, for example, on $1 million building, that would mean that it can be anywhere between $50,000 to $100,000 in savings more for a client that we provide. So it's a very substantial amount of money. And what the fully engineered studies means is that we do not count only the elements that we can see with our eyes. We go into walls, ceiling, plumbing, electricity. So we go into every single component that is available, because there is a lot of savings in your walls and floors and so on. And a lot of clients don't even know that that can provide such significant savings. So that's why
it's funny that you said that, because they're asking everything, like, what kind of wires do you have inside your walls? And you're right, all that stuff. So it's but anyways, I'll let you keep talking, but I find it really fascinating, like some of the questions they're asking. I'm like, huh? So but go ahead, I'm sorry.
Yes, some of our customers also ask if there is if the cost segregation can trigger an audit. Cost segregation by itself will not trigger an audit. The reason for that is because it has been on the market, established strategy for more than 20 years. So by itself, it will not trigger an audit. What can trigger an audit is if the cost segregation is not done properly. So because of our methodology, we have never lost an audit within our company. And if our clients were audited, they were audited for other reasons than the cost segregation. But if the cost segregation came to a scrutiny, we never needed to give $1 back to the IRS because of our cost segregation study. So our clients can sleep peacefully, knowing that the study is done very transparently, and it's very clear for any person from the IRS that would be looking at it, because all the components are listed separately. Everything is very transparent, very detailed. So there's no question marks left for anybody who would be looking at the cost segregation study.
Interesting. And what's like a timeline on something like this to process it? I'm assuming it depends on how big the asset is, the property.
It depends. And normally, when we do the complementary evaluation, that would take around 3-4 days. We guide a client through the process and through the numbers. And if a client decides that this is absolutely a great strategy for him or for her, then we start the studies. And usually it is around 10 weeks study. So the biggest process is to complete the paperwork and the documents, because sometimes the clients don't have all the documents and all the paperwork. So sometimes they need to dig into it. So this might be a little challenging for the clients sometimes, but once we assemble all the needed documents, then we go into all the studies and we do the inspection to count all the elements. And then we provide the fully engineered study at the end of the process. So it's a very straightforward process. We list all the documents that are needed. They are not complicated, of course, because once you buy the real estate, you have all the documents, in your office probably, and we just, we go to work at that point.
Awesome. And you guys send somebody out. I'm assuming you send somebody out to the asset, the property, and they're spending some time there as well, doing a walkthrough, and then take all the
Correct.
documents. How does that work?
Correct. So some people would like to have engineers on the grounds with the boots on the ground doing the inspection. Sometimes people just need a walkthrough through the engineer with the camera. So there is different ways of doing it. However, a lot of our clients have the walkthrough with the people on the ground because they are big properties. They are, for example, hotels or big warehouses or huge medical buildings. So if the property is more complicated, it's bigger, then we definitely do the studies with the engineer on the ground. But if something is very simple, like a residential home, there are car washes, car dealerships, restaurants, hospitals, medical buildings, depending, or clinics that are smaller, then obviously we can make it happen other way. So there are different ways of addressing it.
No, I think that's great, because you think about it, like we're in investment, mainly our investments is the multifamily world, or like the storage facilities.
Oh yeah, multifamily, absolutely. We do multifamily, a lot of multifamilies, absolutely. Yes.
That's the thing. Now, where does it not make sense? Say for somebody that has an asset, they haven't had this done, they've owned it for 5 years, but they're going to be getting ready to sell the asset. Does that still make sense doing a cost segregation, or not really? Tell us a little bit about how that works if they're going to be selling the asset.
So cost segregation is for people who actually hold the properties for a longer period of time. So if somebody is getting ready for selling the property, this is not the best strategy, and this is not the time to do the cost segregation. To do the cost segregation, the best time for it is when you buy the property, and then you hold it, for example, for 5 years or 7 years or 10 years, whatever amount of time. But when you hold it, it is not for people who do flipping. So it makes sense for people who hold the property for a little bit longer period of time, and definitely not before the sale time.
Excellent. And you mentioned you do residential then. You guys do residential properties.
Absolutely.
Okay.
As long as the residential is $500,000 and up, or it can be, for example, $400,000 purchase price. And for example, if somebody puts $200,000 in improvements into the house, that goes above $500,000. So anything that either the purchase price itself is $1 million, or sorry, $500,000, or for example, the purchase price is 400,000, and then you do 200,000 with the improvements, then altogether it goes above $500,000, and then we can absolutely do that.
So then it must make sense then for some of these people that are buying properties, doing Airbnbs in very nice areas like the LAs,
Absolutely.
like the South Floridas.
Absolutely.
They're buying beautiful big properties. So interesting. I bet you the Airbnb world are not even taking advantage of that now. So you guys listening to right now, I know there's a lot of Airbnb investors that are listening to this. So it's something you should definitely look into. So that's good to know.
It will absolutely help so many clients that do the Airbnbs, residential homes, or multifamily or apartments, because it will be able to provide you the cash flow and, for example, the money to do the improvements in the apartments, since the savings will be so significant that what our clients do with the money when they are able to save it is they usually either do improvements with that money, or they invest in another apartment and make the money with their own money instead of waiting for the money for 27 and a half years or 39 years to come back.
So it's a great strategy where they will put a down payment into an asset and then do a cost
Yes.
segregation, pull the capital out and just go out and acquire another asset.
Yes.
I like that.
Absolutely.
It's a great strategy.
Mm-hmm.
It's a great strategy. And I'm sure you probably have clients. That's all they do. That's probably their model.
Well, people, once they do cost segregation on one building, then obviously they come back all the time because they see the amounts of money that people can save. For example, even if there is $1 million building, depending on the type of building, people can have anywhere from $200,000 to $400,000 or even $500,000 federal tax write-off in the first year. So on $1 million building, to have that amount of money to qualify for a federal tax write-off, this is not just a little money. This is a very significant
and you're
amount of
probably
money.
getting into it. If it's $1 million building as an investor, you're probably getting into it around like 200 to 300,000. So you're getting that capital in a sense back through your tax discounts or tax breaks plus some. So it's I like it. Now you mentioned a couple depending on the building and the numbers fluctuate on a different building. What causes that? I'm just kind of curious. Why would it be one price versus another building be another price?
So for example, when someone has a warehouse, you only have walls, okay? Usually simple walls and not really much goes into the warehouse. If you have a medical building, that's a completely different ballgame because there is a lot of different equipment, a lot of electricity that goes into it, a lot of different technical equipment that goes into it. So there's a lot more components in a building like that that qualify for cost segregation. In a place like a warehouse, you still can have significant savings, but it's not going to be percentage-wise as big as the medical building, for example.
So the more equipment that they have, or the more that they put into the asset, if you will, into the property, then that's where there's more write-offs, if you will, because
Yes.
there's a lot more bells and whistles, if you say, in a sense.
Correct. Yes, correct.
Interesting.
There's
Now,
there's electricity that goes into it and plumbing and so on. So yeah, medical buildings are amazing properties for cost segregation. But multifamily, for example, hotels, any type of building that especially that was bought in between the 2017 and the end of 2022 has a 100% bonus depreciation, full 100% bonus depreciation. Wow. So that's a lotto ticket if somebody hasn't played it yet.
No, that's great. Now, what about probably a lot of business owners don't even realize this, that they like they own a business and they have equipment in there. Do you run into that, or mainly because a lot of these guys, the CPAs are not even aware of cost segregation, some of the smaller CPAs, and I just like I mentioned that one time and they're like, huh? Does that make sense? I'm sure you probably come across that.
Absolutely. Thank you so much for mentioning that, Mark, because it's a phenomenal statement what you just said. We have clients that are multi-million-dollar clients, and their CPAs were absolutely not even aware of the cost segregation. They thought that their CPAs were aware. But when I decided to do the complementary evaluation and present it to their CPA, they were astonished that something like this exists and they can actually use it. So we work with over 400 different CPA firms all over the country. And the CPAs actually hire us as a specialized team to do the cost segregation for their clients. So they can provide more savings and more tax savings deductions for their clients. So the CPA himself or herself cannot really do fully engineered cost segregation study because there is so many different codes, electrical codes. It's an engineering knowledge. So the CPA cannot do it himself. or herself, and that's why they hire us. But many of them don't even know about it, don't know of the power of the cost segregation in terms of the tax savings for their clients. So we always encourage our clients to do the complementary evaluation and present it to their CPA, and we work with their CPA to find the best strategy to maximize the strategy of tax savings for our clients.
Right. So anybody that's listening to us right now, if you're a CPA, actually I had a phone call with a CPA earlier today. So this particular one, I'm sure he's probably aware of it because he owns a lot of assets himself. So I'm sure he's probably on top of it. But I've come across like you know, because we were looking at I was consulting on a business, these guys buying a business in St. Louis, and they own the building, and they had the trucks. It was a plumbing business. They had all kinds of equipment in there, and we were talking about that. I'm like, hey, have you done the cost segregation? And they're like, what is that? And they've owned this business for 30 years and they never knew about it. And I'm like, okay, well, if you're selling the business, it doesn't make sense doing it now. Just leave it. And then the next buyer comes in, he could take advantage of it.
Correct. Correct. So the people who are even selling the assets, they can even mention that to their investors or to the buyers as a bonus to do the cost segregation if the person who is buying their asset is not aware of it. So that will create immediate cash flow for the new buyer. If the new buyer, for example, would like to do some renovations in that property that they are buying. So the seller can have an advantage of mentioning about the cost segregation to the buyer. And then once the buyer knows that they can have a cash flow from that property, that can obviously speed up the sale or make it yes or no.
Awesome.
But more as a yes for a sale.
I like that. Now, would it make sense for somebody that has a portfolio of residential, meaning like, say they have 30 properties in it, but the properties are not worth more than $1 million, or is it based off of each subject property? Tell me, what are your thoughts on that?
So we cannot group the properties together. Every property is counted separately. Unless, for example, there is a hotel that has, for example, 8 little buildings or so at one property and it's counted as one hotel, then it will be counted mostly as a one property. However, if there are separate, for example, apartments or so, every apartment will be counted separately unless there is a multifamily. And for example, there are 10 apartments together or so, then it will be counted as one property.
Got it. So the reason I'm asking, I know somebody that it's actually in Delray. These people are getting ready to buy it. It's 27 units in one community, but the average price on those homes are roughly about 350,000. So I don't know if that would make sense for them to do something like that, even though it's going to be 6.1 million for them to purchase it, because each one of them are deeded separately, but it's a package deal through one LLC. So it has to be off of every legal description, it sounds like.
So if they would like to invest, for example, $150,000 in improvements in each of those apartments, then we can definitely take care of it, and it would definitely make sense.
Got it. Okay, that's good to know. Just thinking, I think a little outside the box sometimes. That's why.
It's
No,
all
that's
about
great.
it's all about thinking outside the box, and the question is there even a box within the
That's a great
entrepreneurs?
point. That's a great point. No, I like it. So, what other, like, is there any questions so far that I haven't asked you that I should have asked you?
Well, we can definitely go back 10 years. It is any type of building that brings the profit. It cannot be a personal residence. So personal residence that does not count for a cost segregation. It has to be something commercial or residential, anything that brings the income.
Got it. Okay, that makes sense.
Yes.
Now, what happens? I'm just curious. Say somebody they they purchased a property, they went out and they sell the building or they sell the asset at year 7. Does that technically get charged back at closing because they've already taken that tax discount? How does that work? I'm just curious.
So yes, if you purchase the property and you do cost segregation studies and you wait for 7 years and you sell the property, then you need to give the cost segregation money back to the sale, unless you would like to do the 1031 exchange and roll it over to the next property that you are going to buy. That can be also buried into the next property as well. Obviously, then the cost segregation from the new property will be less, but we can roll it over with the 1031 exchange towards the next purchase as well. So that is
Huge.
also an opportunity.
That's huge. That's really big. That's good.
Yes.
That's very, very, very informative. Now, how does it work? Like if there's multiple investors, I'm assuming it's based off of the percentage of the ownership of the LLC that they own that kind of gets rolled down to their individual taxes.
Yes, so it doesn't really matter how many partners are in the company, since they need to make a decision if they would like to do the cost segregation. Once they decide that they would like to do the cost segregation, then obviously that amount that is given from a cost segregation study is divided appropriately according to the percentage of the company that they have. And
Okay.
how they are obviously structured with the taxes. So we always work with the CPA. If the client wants us to talk to the CPA and see if the strategy makes sense or how it can be divided to make it 100% legal and proper, then we absolutely work with the CPA. We had multiple conversations with the CPAs from our clients, and we were always able to find a fantastic solution for our clients.
I think that's great. I mean, cost segregation is definitely, if you're in the real estate game for a while, you hear it, but there's a lot of people that have been in the game or that have been in it longer. I remember I've talked to people that have owned properties for 15 years, and we asked about the cost segregation, and that is something that we ask when we're looking at assets. Like, hey, was there cost segregation done on it? So we have a little idea, because it does help with negotiating the property too. When you're trying to purchase the
Correct.
properties.
Correct. Correct.
Yeah. Yep.
It's a great asset in any way. We also do for our clients is, for example, if someone wants to purchase a property or they have 3 or 4 different properties that they want to choose from, we can prepare cost segregation complementary evaluation and show them which property would be the biggest asset in terms of the cost segregation, because every building has a different amount of money, obviously. So we are able to prepare that, and then the client can see, okay, if we would like to focus on the cost segregation, this building would make the most sense to buy. If they focus on something else, of course, they take something else into account. But we can definitely prepare the complementary evaluation for any type of property that our clients want to buy and want to decide which one is better to purchase.
No, that's great. First of all, like how can somebody reach you guys? I just kind of want to put that out there, like if they want to know more.
So the company is called costsegamerica.com, and we are powered by ELB Consulting. So the ELB Consulting is the main umbrella company, and costsegamerica.com is our division, our sales division for the cost segregation. And I will gladly provide my phone number for anybody that would like to contact me and would like to learn if they qualify, if their building would qualify. And once I have all the necessary documents, which are very simple, it's a 1-page form with very basic information, I can prepare the complementary evaluation, and then we guide the client through the numbers. And the client obviously makes their own decision if they would like to pursue or not.
Got it. So do you want to plug the phone number here, or how do you want to do that? Or is there a website, or what do you recommend?
Yes,
It's your call.
I can definitely give my phone number. My number is 917-535-7066. I would like to
Can you
repeat it again.
Yeah.
917-535-7066. And anybody can reach me anytime. If I don't pick up, obviously, I do have an email as well, and a voicemail. So you are more than welcome to leave a voicemail, and I will call you back within the same day. This
Oh,
is
that's great.
how I have the policy with my clients to return the calls the same day, so that my clients don't need to wait and wonder what is happening, if I got the message or not. So this is my personal policy that I do return the calls within the first day.
Oh, that's great. Oh, that's awesome. And you guys do this nationwide? Is that by per state because it's a federal?
Oh, absolutely. We have the biggest clients in the industry, and they have been all over the country. So we do any asset in any state.
That's great. No, this is very, very informative. I just learned something new today, so that was good about the rolling it into the 1031 if you've already taken that cost seg discount. So that's huge. So
It is, yes, because not everybody has all that money to return at the end. But if they would like to roll it over, then there is a possibility for that as well.
okay, that's great.
Mhm.
Anything else that I should have asked,
So a part of the fact that our company has been the pioneer on the market, what we also offer to our clients is the indefinite audit protection. So just in case there is an audit, our client never needs to worry about it, because the audit protection is something that we provide just in case there is an audit. So our clients can sleep peacefully. They have the best study on the market, the most detailed study on the market, and the study that basically gives you the audit protection indefinitely. So you can sleep peacefully knowing that there is absolutely no risk in here, because we can easily defend our studies because of its transparency and our methodology.
That's awesome. And once again, what's the phone number they can contact you one more time on?
My phone number again is 917-535-7066.
Great. Well, this was a great episode of Real Estate Power Play. We'll
And
also put
I would love to encourage people to take advantage of it. And this is the time, actually, that if someone is preparing to file the taxes for the year 2023, this would be the time to actually contact me, because we get very, very booked, fully booked, actually, because this is such a great strategy that most of the investors take advantage of it for the taxes. So we still have some spots left for people who would like to use this strategy for their 2023 taxes, and they are filing the taxes in September, October. We can still accommodate the people, and we can still get the studies done on time, that the clients can deliver it to their CPA, and the CPA can implement it to the strategy of all the tax savings. So I would encourage anybody that is with us online to really contact me sooner than later, because by the end of the month, we will be absolutely fully booked, and then we can not accommodate people anymore for the year 2023. So in general, if anybody would like to see if they qualify, what they can do to qualify, or if they are trying to purchase the building, what would be the best strategy, please do contact me as soon as possible, so we make sure that we have plenty of time to prepare those studies for you, and you can utilize it at your convenience.
no, it's good stuff. So yeah, definitely the time's coming in. What if somebody already did their taxes? Can they go back and modify their taxes and still be able to get this in, or what do you recommend on something like that?
So we never really recommend amending the taxes.
Okay.
As everybody knows, it can trigger different kinds of audits. However, our clients did the cost segregation and did modify the taxes as well. So we had different kinds of scenarios. We have done more than 15,000 different studies. And, my clients are usually the clients who have sometimes pretty complicated buildings and projects. So we truly have done any type of project that you can imagine. And if we do not know how to immediately address it, we have our tax specialists as well within our company that have been doing it for more than 20 years. So we always consult them before we even approach any type of project, so that it absolutely makes sense. We do not want to tell our clients, hey, do the cost segregation studies if they do not qualify. We want to make sure that our client qualifies, that the building qualifies, and that it absolutely makes sense for the client to do it.
Yeah, that totally makes sense. So you just don't go spending people's money, where I'm sure some people will probably still go through it, but that's good. So anything else? We're gonna close it out if not. And no, this is great. So it was great. We finally we met a month ago and we got on here and we just started talking, networking, and I'm sure I'll probably see you around town. You like to get out there and enjoy the music.
Yes, we all love dancing and music. However, this is a perfect example of how proximity is power. We need to plug ourselves into the right environment, into the right group, into the right mindset, and network. Because in business, if we do not go out and we do not network with other people, yes, we can learn at home, but it's not the same. There are so many opportunities that are created, even in the way how we met. It was so spontaneous. However, it turned into something different, right? It turned also into the business potential. So we learn until the last day of our life. There is never a moment when we reach and we can just say, okay, we know it all and there is nothing more to learn or to grow for us. Entrepreneurs, real entrepreneurs, they have a strategy of networking, growing, learning, networking with other people, and proximity is always power. So just because maybe some of your clients that are here with us today, they were guided actually to be with us on this podcast for whatever reason. And because of that, they will be able to take this strategy and use it for their taxes, which will be an amazing present for them because they took the time to invest in themselves. They took the time to watch something new, to learn something new today, and something that is truly very, very beneficial. So I would.
It's huge. Networking, like you hit the nail on the head. You kept saying network, and I'm always about that networking. I remember I was on a podcast not too long ago, and he was asking me a question. He goes, "What is like the number one thing throughout my journey in real estate that was shocking to me?" And I sat there and I thought about it, and I said, in real estate, your competitors your competitors can be your business partners because you end up networking and you do business together. So
Correct.
it's just like, like in your situation, a CPA, you guys end up doing business with CPAs. So indirectly, that's, that one side of they are a competitor, but then the other side you're not. But in real estate, the pie is so big, even if you take a little piece of it, there's a lot to go around to make money in real estate.
Right. The beauty of the cost segregation is something that is a win-win for everybody. So the CPA is a win-win because obviously the CPA wants to provide the biggest amounts of savings for their client. So they will themselves look for the avenues and strategies that can provide it for their client. We do it for the client because the client will significantly benefit from the cost segregation. And there is just a win-win for everybody. So when you work with a strategy or with the studies like this, it's a pleasure to work like that, because it's a win-win for everybody.
Perfect. This has been a pleasure having you on our podcast. Thank you so much, and I'm looking forward to seeing you at some different networking events and talking. And we'll have to when we get done here, we'll talk a little bit briefly, because I know I'm actually I think I'm gonna put one together in about 2 weeks, a networking event here in South Florida. But I do have a couple other friends that are doing some multifamily stuff. So, and then I'm sure you have some stuff you can share with me as well, some great networking events coming up. So thank you so much for coming on to Real Estate Power Play. And for anybody that's listening to us again, I'm going to have her plug her phone number one more time, because I know she did it about 10-15 minutes ago. So go ahead one more time.
So my phone number is 917-535-7066, costsegamerica.com.
Thank you so much for coming on. And
Thank
anybody,
you so
thank
much,
you guys for
Mark.
listening. Yep.
And thank you,
you.
everybody, for being with us, for spending this beautiful time with us. I am hoping that it will enlighten you. It will bring you the knowledge that you can use it to your advantage. So I really hope you enjoyed this episode with us, and I would highly encourage you to contact me to make sure that your buildings can qualify and you can take advantage from what you learned today.
Thank you guys for listening to Real Estate Power Play. Be well. See you next time.
Thank you so